In this series of videos, we're going to have a look at SharePad and how I set up SharePad for my strategy. So what is SharePad? Well, SharePad is it's a comprehensive package for helping us, the private investor, on how to find, screen and pick good quality stocks to invest in. It makes your life a lot easier and can take a lot of work out of your research. And it's one of the most important tools that I use as part of my stock picking toolbox. And when you first look at SharePad, it can be a little bit overwhelming because although it is set up, or the whole philosophy behind SharePad is to find stocks easier, it can take a while to get used to the product. So this is what I'm here for, because one thing I can't emphasize enough is SharePad, in my opinion, is only as good as the strategy that you have. Although SharePad can help you, formulate a successful strategy if you don't already have one. However, the strategy that I use is very much based on the naked trader. I'll provide links at the bottom of this YouTube page so you can find where to buy the Naked Trader book and also where to subscribe to SharePad. So where can I find SharePad? Well, SharePad's from the makers of ShareScope, a company called Ionica. And if you just Google for ShareScope or SharePad, it should take you to this landing page here. But I'll put the link at the bottom of the YouTube page so you can find that. And if you want to have learn a quick overview from the makers, then you can go on to SharePad here, and then you can have a scroll down, and it gives you a description of what SharePad can do, and it can do a lot. I mean, as it says here, everything in one place, and it's true. You've got UK, US, European stocks. It's all included. Funds, investment trusts, ETFs, global market indices, commodities, bonds, forex, cryptocurrencies. Wow, live news, the RNS feeds. You can filter for the stock screening, superior portfolio management, and it's available online. So where do you subscribe to SharePad? Well, up here you've got subscribe. Click on SharePad, and then you'll see there's two versions of SharePad. There's the SharePad Standard and SharePad Pro, and there's your monthly fee and annual fee as of June 2020. It's not expensive. Seriously, listen to me, if you are serious about investing successfully in the stock market, SharePad is an essential tool. And the annual fee or even the monthly fee is not expensive. Now, the strategy that I'm going to show you and how to set up SharePad based on that strategy can be done on just the standard subscription of SharePad. Also, there is a 30-day no quibble back guarantee, as they called it, and it's real. Pay for the 30 days. If you're not happy, you'll get your money back. And I can attest today that the SharePad support team are absolutely fantastic. They really are friendly. And if you want to cancel, and we hope you don't, or I hope you don't, should I say, I don't work for this company, but I've phoned them quite a few times. And if you want to cancel, just phone them. They will ask you why. They want to improve their system, but they're not going to hold it against you. They're not going to talk you into staying. They are truly friendly. Also, the support channel is also by telephone or email. And if you need help with them, just phone them. Don't worry about it. They're fantastic, and they will talk you through any issues that you have. It's one of the best support portals that I've ever seen anywhere. They're absolutely fantastic that way. Also, and even better, if you want, there is a refer a friend system. So if you want free 30 days, and you also help me with a free 30 days, then send me an email and I'll give you details on how I can refer you as a friend, and then you're helping us both out. And I'll leave my email on the link down below. Okay, so back onto SharePad. Let's have a quick overview before we go into setting up SharePad. Let's just have a look at how and why I've got it set up the way I have. Okay, let's first of all look at my strategy. So what is my strategy? Okay, here is the set of rules that I use, and it is loosely based on the Naked Trader. Again, I'm going to put the link up to the Naked Trader's book by Robbie Burns. It's a fantastic book, and if you're new to investing in the stock market, I highly recommend you read that book, and it will really help you out getting started. Anyway, here is the rules that I use. Turnover, or revenue, has increased and likely to increase. Pre-tax profit has increased and likely to increase. Earnings per share has increased and likely to increase. Now, you think that 3 rules would be a no-brainer, really, but there's a lot of, highly professional, skilled investors out there, private investors, who they have a strategy of looking at contrarian type shares to invest in. These are undervalued shares that may have gone through a hard time, where the profits has not increased, or their earnings per share has taken a knock, their sales has taken a knock. They will invest in them, but that is not us. This is our strategy. So I'm going to say it again, and I'll say it again, and I'll say it again, and I'll say it during the whole course of the series. Turnover, pre-tax profit, earnings per share has increased and likely to increase. So number 4 is like an evaluation of how cheap or expensive a share is. And they do that by taking the market capitalization, divide that by pre-tax profit, and you want a number less than 15. Again, we're going to show you how to set that up. Net debt, we're going to have a net debt rating, which is going to be less than 3 times the pre-tax profit. If you're new to investing, this may sound a bit complicated, but it's not. Especially if you read the Naked Trader book, you'll completely understand where we're coming from here. And we've got the 1-year chart must be rising. So if you look at the beginning of the year, or from 12 months ago, you want that end to be lower than the right-hand end, basically where the share price is now. And then some extra bits is, your positive cash flow per share. I'll show you that as well. And return on capital employed has got to be more than 10. Again, this is more to do with balance sheet strength. The cash flow statement, we've got to just make sure that there is a good flow of cash go through the company and it's positive. So they're not borrowing more than they're earning on a really basic level. And the outlook is positive. And this is the outlook from trading statements. Okay, so we're back onto the SharePad screen, and you can see that there is a layout of a number of windows. But there's 2 different colors here. If you look here, you can see that there's a blue border around this window, and this refers to lists and portfolio management, where you want to compare loads of stocks together. And it comes in columns, where we can configure these columns to our needs. And you can see here, what I've got is, you've got the market capitalization, which we need for one of our rules, where we divide the market cap, the pre-tax profit, into the market cap to get less than 15. We've got the current price. For me, it's the live price. However, again, if you just subscribe to basic SharePad, it's the delayed price. That doesn't matter. Then we've got the percent from close. This basically means that, Gem Diamonds has gone up 2.8% since the closing price of yesterday. So here we go. My rules. The turnover has increased and likely to increase. What I've got here is called forecast turnover percent change. So we've set up this column, and it's green, to show me that brokers think that Games Workshop in the future is going to think that their turnover is going to increase. Boom. And it's green, 5.4%. Same with pre-tax profit. The brokers seem to think that there's a good chance that the pre-tax profit will increase by around 4.9%. Same with earnings per share, 3.9%. And you can see here I've got these, when they're positive, they're green. When they're negative, SharePad colour them red. I've also highlighted these in bold. And if there's no forecasts, or if the figures are negative, you're not interested either, and these are blank. What I like about this 3 columns here, and they're wedged in between, we'll go into the rest here in a minute. What I like about this column, putting them together, is you can easily see which ones satisfy my rules. Just even by scrolling down, it's so easy on the eyes, it's wonderful. Look at this one here, 3%, 2%, 5%, pharmaceutical company. This one's even better. 26%, 22%, easy. The first 3 rules could easily be seen on this list menu. So we move on to the valuation stage, which is the price to earnings ratio. Again, with this one, I don't really like to use the PE. It's widely used, but I think it's pretty meaningless, to be honest. However, I use it as a sort of comparison to what we use in our rules, which is remember the market cap divided by pre-tax profit is less than 15. And these two, that's why I've got 15 times here, because I know what it means. 15 times FC. H means historic, FC means forecasted. On the historic one, this is basically the last reported pre-tax profit on the financial statement. Although it's divided by the current market cap, it just tends to give me a historic valuation of, and it's over 15 times. So it let me know it's a little bit expensive. It sort of aligns with the PE on this regard. But the forecast one is 15 times the forecast. Again, this is to do with the broker forecast that we mentioned here. This is the percentage, and it's come with a calculation of over 15. So this valuation tells me that, it's over my 15 times rule. So we generally wouldn't be investing in that unless there was some exceptional circumstances. Again, here's the net debt. This is our sort of quality ratios coming up here. We remember one of the rules, the net debt has got to be less than 3 times the pre-tax profit. And this is my rule of thumb to make sure that, we're not investing in a company that's highly indebted, because of highly indebted companies can go bust. This one is 6 historic, which is the historic net debt figure, divided by the historic pre-tax profit. So this won't move now, this is fact. And then you've got the forecast one, and we can get a sense of whether the debt is significantly increasing. Actually, debt's going down. However, it's still above our rule. Because I've got space here, I've added a bit more columns that's not necessarily part of the rules. I mean, I want yield, basically, it lets me know if there is dividends going to be paid out. Here's the other one, return on capital employed. I like to see these into double figures, so I've got that there, which is 12.6, which it is. There is the free cash flow per share divided by normal earnings per share. Again, I'll go into that later on, but this is to do with the rule number 7, a positive cash flow per share. And this one here does a comparison against earnings per share, which would be this figure here. But we will, well, that's a percentage change, but we'll move into that later. And then I've got some columns where it'll tell me where the next 6 month statement is going to be announced, and when we'll get to see the next preliminary financial results here. So this is the list window, and as you can see, I've got some colours here. The valuation is coloured in yellow column. This about the debt, I've got it in green. For me, the live price, you can see flashing there, but I've got that in yellow there just to make things easier. And finally, to the left column, I've got what's called a news flash, a news flag. So you can click on that, and it takes us onto, you can see the news section here. So we'll go into that later on as well. And the rest of the windows are actually green. You can see these green sort of headers here. And these have got further main configuration options here. These you can click these to change the actual window. For instance, on this side is currently set to news. There, but we can set that to the financials tab or the chart tab. Currently, I've got the set to news. And then down the bottom here, we've got what's called the financial tabs. If I click on that, you can see the financial tabs going white. And then on the financial tab, you've got what's called the summary tab, which has got quite a few, sort of ratios on it and some other information just to give you a quick snapshot of the health of the company. You could get a bit more about the company, where they operate, what they do, and some contact numbers on the board of directors and stuff. And then you've got income statement. I think this data can go back as far as 20 years. You've got the figures here for 16, 17, 18, 19. You've also got, if they're available, broker forecasts. You can see so this is interesting. You can see there's no broker forecast here. And this matches, what's this filter group holdings. You can see that these columns, remember my rules, turnover, pre-tax profit, earnings per share has increased and likely to increase. Well, you can see there's no broker forecast here. And that matches down here because we see no broker forecast. But if we would go to one with broker forecasts and they're all green, you can now see that. So it's given us the figures from 2019. And I'll just go, we can scroll back to see 2 years broker forecasts and forecast, the figures for the actual financial figures from 18 and 19 on the income statement. You've got one for the balance sheet. There's a lot here. And then cash flow. So, you can see what I like about this again. It's, if the figures are red, then, it's a warning sign. Colour, it's all about the colour. And the ratios, lots and lots of ratios. Again, what I like about SharePad, there's some information, there's information about dividends. And then the forecasts, or how many companies, how many brokers are forecasting this company. The more brokers you've got, the more reliable broker information can be, as in up here. So, but what I like about SharePad, again, you've got this custom tab. Basically, what we've got here is that we can take any of this information, it's like filtering it out, and make a tab for ourselves so we can see what is important to us. Guess what? I've got a quality section here. Turnover. Now, when you look at the turnover, you can see the forecast is up 2.9%. The same as this column here on the list, 2.9%. Now, the list menu, with regards to my rules, turnover has increased and likely to increase. Well, all the list menu shows me is that it's likely to increase. What about before? This is where we look at historic information. Turnover has increased and likely to increase. So we can see here on 2019, it increased. and it's likely to increase. And even forecasted a year after that, it's likely to increase further. Also, what is fantastic is you can chart the history here. How good is that? And this, again, helps us determine the credibility of forecasts. It's not perfect, but if you've got a wind pushing behind you called momentum, it's likely that that momentum will carry on. And you can see here that since way back in 2006, turnover increased, kind of stalled a bit, then increased again. And it looks like here it's started to increase, and it may in the future just increase slowly. We've got the same for the pre-tax profit and earnings per share. So we can see that. We've got a good historic overview whether turnover has increased and likely to increase. Pre-tax profit has increased and likely to increase. Earnings per share has increased and likely to increase. And that's how we've got this set up. So you've got the actual figures here. Well, on the list it's percentage. Here you've got the actual figure with the percentage underneath it. Same with the pre-tax profit. Same with the percent change. Earnings per share percent change. I've added the yield in just to see if the dividend yield has been increasing. We've got more dividend each year, or whether we get dividends at all. And then here's the net cash debt actual figure. So again, if it is in red, it's debt. And this is the actual debt figure, and we can see whether the debt has been increasing or not. And we know up here on the list menu that the valuation has been going down, and this is also helped with the fact that the debt is going down, so that's always a good thing. Then we come to the valuation. Okay, so we cannot get the 15 times, market cap divided by pre-tax profit is less than 15 valuation down here, but at least we can add in the PE here. I've also got what's called the PEG ratio, and this is another ratio which is used for another strategy called the Zulu principle. If you're interested in learning about PEG, then it's described in another book. It's called the Zulu Principle by Jim Slater. And I really think once you've read Naked Trader, go on to the Zulu Principle to learn a bit more about cash flows and the PEG rating. It's really handy, and there you can help develop your own strategy. I've got this risk section. I'll move on from that at the moment. I've added more than I need to for my rules, so we'll just leave that just now. And then we've got what's called the cash flow. Again, positive cash flow per share. And this is what I like to see. Net cash from operations. I want to see that's positive, which it is. We've also got free cash flow per share. And you can see that's positive. Earnings per share. So I like to compare the free cash flow per share by the earnings per share. There's a bit of a difference there just now. And what cash is left. What we're looking for here is that it's all grade and not red. If any of this is red, especially net cash from operations or free cash flow per share is red, then there's a sign that the company got some money problems. And again, that goes against our rule. And here's the returns, which is, return on capital employed. Again, if you're not sure what these figures are, I believe you can go into, where is it? You can go into, it's up here. No, you go into the help menu. There we go. And you can type in ROCE, search return on capital employed, and it can tell you more about what it means. But this is, I like to see this ratio. I've also, again, as before, not part of the rules, but I've added in some further criteria that I like to see, but we're not going to look into that just now. And another one is dilution number of shares. Basically, this means that if a company's in trouble, it's running out of money, it can raise finance if it doesn't want to go to the bank and increase its debt, it can raise further finance by issuing more shares, which basically dilutes shares, and I don't like to see that. So that's that window here. The next window I've got is a chart window, and we'll go into this in a further series as well, but it's probably self-explanatory. I use candlesticks, and there's some moving averages here, and I like to look at the volume here. This is currently set on 2 years. Again, my rule, 1 year chart must be rising. I've got it set to 2 years here, but you can still see, if I flick through, Finsbury Food, that's where I was at. If I try and scroll down to see some of these that comply with my rules, there's one there, Tune. We can click on there, and you can see the chart is lower here, higher to the right hand side. Although it had this massive knock here, I probably would have been still invested. We could, this is something you could look at. It's increasing, although this is quite volatile. I'd be looking at a sort of another type of chart. This one, for instance, is a bit less volatile. This is where we had a market crash due to the coronavirus and the oil price. So if it wasn't for that, you're looking generally for a 45-degree sort of upturn on the share price. And finally, we've got the news section to the right-hand side of the screen here. What I like about the news section with SharePad is color coding. Just like everything else here, it's all got to do with the color. Color makes everything, puts everything to context. So, we're going to go again, this is just a basic overview, but you can see here, if I click on, globe data, for instance, I haven't looked at half of these companies. I'm just, clicking on the ones that are green here to start off with. You can see I've got green highlighter of the news that's most important to me. And this is generally the annual accounts, financial results, and the, interim report. The only confusing bit is if I click on any of these, this is also green as well, and I'm not sure if that can change. Again, I've got some, you should see in the financial accounts, I've got some words that get highlighted, again, that I want to see. For instance, yellow is profit before tax, and net debt is the net debt figure. And this just helps me compare if these figures are correct, or if we get a financial results out that day. Some of this might not be updated yet, so we can have a look at the actual net debt figure here, compare it to the forecasted, the forecast here, which should get updated. I've got in purple some outlook because, again, rule number 9, outlook must be positive. So if you look at this, we enter 2020 with strong fundamentals of our business model, including enhanced revenue visibility, strong margins, cash conversion. The global political and economic environment, including coronavirus, continues to be uncertain. However, we remain confident in our business model and our ability to execute well. I mean, that's positive, isn't it? So again, you can't just rely on that, but when you add in this to the rest of the rules, for instance, turnover, pre-tax profit, earnings per share is increasing. This is good. You can see, again, the historic turnover. Pre-tax profit was a bit lumpy. Same with the earnings per share, so you could look in that further. The share price is like, in the past 2 years, it's gone up 140%. It's got quite a large market cap here, and you can see the valuation is large, 165 times. Although it goes down to 36 times, again 15 times pre-tax profit, so it goes against our rules. A bit of high debt there, although they must be paying back the debt because it's going down there. We'll look at the news list later and how we can set that up. Again, you can go all news here, and then you can have a look at the news of the day. You can go newer or older. We can go back to 7 o'clock. And there you can see a lot of reds. Because what is happening, because of the coronavirus crash, a lot of companies are now, they're raising money by issuing more shares. because for a lot of these good quality companies, the share price is now so cheap that they want investors to invest more, so they're offering shares at a lower price. But I really dislike placings and dilutions, because if I've already held a stock and then they put a placing, what generally they offer more shares at a cheaper price to institutional investors. I don't get the chance to participate in that, and the result of that means that the share price generally goes down. My shares are of less value. Again, in future they may go up, which is fine, but I just don't like this whole concept. And a lot of companies won't, they're highly indebted. A lot of poor quality companies, they're highly indebted. They won't get, they won't be able to raise any more finances from banks, so they can carry on issuing shares. And as a famous bear investor says, Tom Winifred, it's called confetti. Just dish out confetti. And there's always private investors, particularly private investors, who think that these poor companies are good and they'll just carry on buying the shares and they'll constantly get diluted. I steer away from companies that have got these places. But we'll get back onto that later. Okay, that's been a long video with an overview of SharePad. I believe I've covered it quite well. We'll go on more into layouts later, the help section, that kind of thing. And as we go along and show you how I set this up, you'll discover more and more powerful features within SharePad itself. So that's part 1 out of the way. I hope I didn't bore you too much. And in part 2, we will start setting up SharePad, first of all, working on the list. Speak to you soon.